Arthur Hayes, the former CEO of BitMEX, says that the doom loop has begun, that $1 equals €1, and now we're losing trust in fiat currencies, which eventually will lead to $1 million Bitcoin. Now, as you know, I don't think there's any real reason to start giving targets like seven-figure Bitcoin or talking about things like that that could potentially happen in the future. But what is important there is the idea behind it. If there actually is a lack of trust now, moving towards yield curve control now as a result. And if that could eventually lead to a lack of trust in those systems and a rise in hard assets like Bitcoin and even gold, as he discusses. I'm going to talk about that and a lot more later, and also have an amazing guest today, Charlie Burton, who you guys have seen here many times before. Let's get into it.
Let's go.
What is up, everybody? I am Scott Melker, also known as the Wolf of Wall Street. Before we get started, please subscribe to the channel and go ahead and tap the like button with your middle finger. So everybody just really wants to do this right now to markets, right? So you might as well use that middle finger to tap the like button. Guys, as I mentioned before, we now have dollar-euro parity. Basically, it has been 20 years since that has happened, where $1 equals €1. It's like the old Spider-Man twin meme, where the two Spider-Mans are pointing at each other, and they're exactly the same. So as usual, as you've come to expect from this channel, when we have something huge like this happening in markets, I like to bring on someone much smarter than myself, who is deep in the markets to discuss what is happening. Of course, today I have Charlie Burton. Charlie is primarily a forex trader, so probably has his finger on the pulse of what's happening with these currencies at the moment, more so than me. Charlie, how are you, man?
Very good, thank you. And thanks for having me back on the show.
Of course, man. So listen, let's talk parity. What are you thinking now? You kind of joked right before we got on that us Bitcoin traders are used to this level of volatility, but now we're seeing even potentially more volatility in forex markets.
Yeah, I'm just waiting for all these traders to come back to forex who left it over the years once Bitcoin and the crypto world got so busy. But yeah, it's nice to see ranges expand on these currency markets. Back in the financial crisis, we had euro dollar doing 300 pip daily ranges, and then we went all the way down to about 40 pip daily ranges just even into last year, but we've expanded back out well above 100 pip daily ranges. So there's some lovely movements that we're seeing in some of these liquid assets.
So what to you does this mean for all the other markets? Obviously, dollar strength is somewhat inversely correlated to the price of everything, right? Hard assets, stocks, equities. We see it across the board. I mean, the dollar, even with this high inflation, is absolutely just destroying everything in its path.
Yeah, absolutely. It's a freight train at the moment. Interestingly, something like 72% of retail traders are short dollar right now. What a surprise. So why is it that the retail crowd out there so often end up getting on the wrong side of these trends, and then they stay in the wrong side of the trends as well? So I find that quite interesting at the moment. And also, if we look at dollar positioning, and you've mentioned euro dollar, the biggest currency pair at this stage in the, we'll see in 10 years time when we're all where we are at. But if you look at the positioning of the hedge funds around the world, then they're only just getting to the point where they are building a bigger euro dollar short position, even only into last week. And so they got to their biggest euro dollar short position in about November of last year, and they're only just getting back to that position, that net short size, as we speak, as of last week. So I think that's an interesting one, watching what those hedge funds are up to, and are they going to continue to expand those shorts? My general view is, I think there's a lot of people been talking about parity, myself included, of course, and we're here, what next? And I think that because of all the talk about parity, that probably what will happen is we will do an overshoot, and so I think we're going to overshoot parity.
So overshoot to what, 95 cents, 96, 97, something like that, or you see it farther? Because it's interesting. if hedge funds are just now getting short, that means their upside on an overshoot now is still only that 3 or 4%. Really, maybe 5.
Yeah, I mean, well, you say only just getting short, but only just getting to the same short
Yes,
positional
excuse me,
size
max
as,
short. Yes,
yeah,
yes.
yeah. Oh, yeah, absolutely. And the thing is with hedge funds, and reason why it's good to watch what they're doing collectively is because, like I've just said about the retail crowd, and we can always look at any market, and if the market's flying up, you know the retail crowd are probably on the wrong side of it. But if you look at the hedge funds, they're great at chasing the trends, but they're terrible at the turns. They're always almost at their
Horrible.
max short position just as a market turns, you know. So I do think that there's more scope here from a positional perspective at the moment, but then we will get to a point where they reach an extreme in their short positioning, and then we start wanting to have a look for, fun enough, for
Yeah,
reversals.
squeeze the other way. Sure,
Yeah,
of
exactly.
course.
And that
Yeah.
may well be. I don't know, like you don't know at the moment. None of us know whether the euro goes to 98, 97, 95. But I do think there is this overshoot, and then we'll carry on watching the sentiment in the market as well as the technicals and the fundamentals around that time. So I think that's going to be interesting. But another thing you've mentioned already is these inflation figures coming out tomorrow. So in the very short term, that's going to be an interesting report coming out tomorrow.
Yeah, I'm seeing estimates as high as 9%, but seems the consensus is probably around 8.8, which is still, 1 point. It's an increase month to month, an increase year to year. It's showing that things have not yet turned around. Somebody asked, what is parity? It just means they're equal in price. Same. Very, very obviously. Yeah. Here. So I don't know, Charlie, do you have any charts that you wanted to share? I know you were pulling some things up over there. If not,
Yeah.
you don't have to. But you're going to just go ahead and hit that share on the bottom because I don't see them pulled up yet.
Okay, let's do that then.
Cool. I can see myself in your screen.
Sorry, because I've got
Move
the wrong.
my head. No, it's cool. You're good.
Let me move that across there then, and see if I can share a different screen.
Sure. Just when you hit share, you can go. Yeah, there you go.
Okay.
Boom.
So as we've
There
been
you go.
talking about the dollar, let's crack on with the dollar first of all, and then we can come. We'll move back to the cryptos as well, if you like. This is a monthly chart of the dollar index. In fact, what I'm going to do is I'm going to go out to a quarterly chart, because the dollar index, this is the dollar index futures I'm using here. We've just gone through this horizontal line here, which marries up to way, way back in the late 1990s. But that's how far we're having to go back at the moment to find the next technical resistance levels. But we've just blasted through that just recently. And so as far as the dollar index is concerned, we can see scope right away into the teens for the dollar to potentially go. A bit like you've just said, I don't want to get too far ahead of myself, but I do think that there is that scope for the euro dollar to overshoot still. But in the very short term, obviously anything can happen. We've got news coming out tomorrow and stuff. But one thing going into tomorrow, if I bring us back to maybe the shorter term, looking at the dollar index here, this is the daily chart of the dollar index, is let's assume, like you said, the figures come in tomorrow, those inflation figures come in as per expectations. I think one thing to watch out for when you've already had a market which has been in a good run, one thing is always to watch out for is when they sell the fact. So they're buying the rumor and sell the fact. So in fact, we have solid numbers coming out which meet, let's say, match expectations, but then the dollar sells off. That could be the beginning of a bit of a relief retracement, I think, in the short term there. But I'm still a longer term bull on this at the moment.
Yeah, I think that it's an interesting point you make, and something I talk about all the time. It's really not about the number; it's about what the expectation was versus the number, right?
Yeah, absolutely, yeah.
The number can be bad. The Fed could say, 0.75 rate hike, and then Goldman can say, hey, we're pricing in a 1 rate hike, and then if it actually comes in at 0.75, all of a sudden it's good news.
And I think
good news.
and yeah, and another thing I think is interesting at the moment is what we've seen. We've seen it's like the narrative has changed slightly. The market sentiment has just adjusted slightly, where we've all been so focused on, and we still are, on inflation and the path of the Federal Reserve rate hikes. But also there's this other elephant in the room now, which is global growth and US growth as well, of course. And so growth is becoming a story, hasn't it? In the last couple of weeks or so, it's just emerged. So there's now concerns about the growth of the global economy in the next 6 months to 12 months. So I think that has an impact as well. But if the global economy's growth starts to stall, which is what so many of us are looking towards, that's only going to be more of a benefit, or the dollar's only going to benefit even more, isn't it? In that short term.
Yeah. And so, what does this all mean for crypto in your mind?
In my mind, unfortunately for crypto, I think it's still got headwinds, and so because the way that I look at this, if we are about to see more of a slowing in global economy, we've got issues in China, we've got issues here in Europe, of course, with the obvious issues here with Russia and natural gas flows and the Ukraine war, and it's just such a huge amount of events, and we've got China locking down parts of their cities again already, trying to have a zero tolerance to COVID when COVID's exploding. There's so much going on that that if your belief, like my belief, is I'm certainly looking at the likes of the stock market still having further to fall, and I don't mean in the short term. I think the S&P could very easily have a rally.
There's always mind-melting rallies in a bear market, regardless.
Exactly.
So,
yeah. It could easily have a rally, but overall, I still think the S&P. The S&P from the lows of 2009 to where we had negative interest rates to where we got to at the beginning of this year, where interest rates are starting to rise. We haven't even done a 38% retracement of that entire move yet, with that entire bull market run. So I do think there's scope for more of a retracement on the S&P. But unfortunately, if there is, and if it does, if the stock markets roll over, as you know, we've seen a lot of positive correlation between stock markets, tech stocks, and the likes of the crypto.
Sadly.
Yeah.
Challenging my bias that it was an uncorrelated asset, of course. Yes.
Well, that's just what it's been going. But as you also know, that these correlations do change over time as well. So all I can take is where we're at right now. And it's always possible that at some point those correlations they change, and that will happen at times, like you've mentioned with gold as well. So I still see with that King Dollar story that we've got here at the moment that it's not going to benefit gold in the short term here. And but I do think that Bitcoin's interesting right now, because as you know, if I can find my charts again, will I be able to bring this over? Yep. On a monthly chart here, we can see that Bitcoin has come back down, as everybody knows, to those 2017 highs, and it's sitting around that key 20,000 level. It's the 50-month moving average there, my black moving average here. So it's certainly got the scope for a bounce in the shorter term. But that's where I'm just a little bit cautious at the moment, is because of the stock markets.
And so how are you trading all of this at the moment?
I'm trading euro dollar.
It's amazing. I mean, that's where all the action is, right?
Yeah,
you got to go where everybody's looking.
Yeah, the euro dollar's had these great trends. I've been trading most of that trend for all of this year, and really since September of last year. So that's been my predominant. If I can bring up a chart now of euro dollar, that's for me personally been. Obviously, it's an inverse of the dollar, of course. But if we bring up a monthly chart,
inverse DXY chart, right? Yeah, of course.
Yeah, and so we can see this move that we've had. This is each one of these bars is a monthly time frame. So this has been. I started in about September of last year. Where are we? About where my cursor is, somewhere over here. And so that's predominantly been it. But as always in any market move, it's never a one-way street. There'll be some fierce bounces and rallies as we go along, and so I'm always, we have to be prepared for that. So, and certainly as a trader, you don't catch every single move. I'd love to sit here and say, oh yes, I just sold it right up here, and then I've closed it all out down here. That's not it, is it? I've been in and out like lots of people, and you catch some runs which are really some nice sweet runs, and then you miss some other runs. But that's the realities of trading. But it has been a good time. But you can always, like any of my old school teachers would have said, could have done better.
I mean, you could have, but if you're comparing yourself to perfection as a trader, it's going to be a long and arduous losing haul.
Absolutely. Absolutely. There's no such thing.
Yeah, absolutely. So where can people find you, follow you? You have a group as well, correct?
Yeah, I do. If people go to charlieburtontrading.com, they can sign up. They've got a free newsletter on there, and there's some resources and stuff, and they can check me out over there. Do check me out on my YouTube channel as well. That's Charlie Burton Trading, or Charlie B Trader on Twitter.
As much as I hate to admit it at this moment, the macro guys actually might be better for listening to than us crypto guys, because it gives you a much better gauge of what's happening, certainly with world markets. Charlie, thank you so much for taking the time. I really, really do appreciate you coming to join once again. And everybody, please go check out all those things he just told you about. Thanks, Charlie.
Thanks ever so much for having me on.
Of course. Yeah, guys, Charlie Burton, what a legend. Awesome. Really crazy times in markets at the moment. Hard to keep your finger on everything that's happening. Like I said, it used to be that in crypto, you could sort of just technically trade everything that was happening, simply use a chart. Bitcoin sort of traded in its own vacuum. Certainly all coins traded based on Bitcoin. Now you really do have to have your pulse on everything that's happening, which probably means, honestly, for most 99% of people, ignore all of it, go to the beach and wait for sunnier days. But that's neither here nor there. Of course, now listen, we had the extremely clickbaiting title of the stream, which was Bitcoin $2 million or whatever it was, right? As I said in the intro, it's not really about whether Bitcoin hits $1 million. It's really about talking about the conditions that could allow Bitcoin to rise dramatically in the face of melting down global markets, or in a bear market, in a bull market, any of those. Where can we sort of decouple and see Bitcoin continue to rise to these much, much higher sort of prices that we talked about? This is Arthur Hayes, of course. The doom loop has begun. 1 USD equals 1 euro. Prepare yourselves for YCC. That's yield curve control. We'll talk about that in a second. And Bitcoin at 1 million, but please be patient. Yeah, these things take time. Yeah, please be patient. It might take a little while, obviously, to get there. So if you guys missed it, he's written about this doom loop in the past. The doom loop obviously talks about the three ways that countries finance their debt. Of course, selling debt to domestic entities, selling debt to foreign entities, and of course, the good old central bank money printer. And this is what he says here. YCC is the end game. When it's finally implicitly or explicitly declared, it's game over for the value of the USD versus gold, and more importantly, Bitcoin. YCC is how we get to 1 million Bitcoin and to $10,000 to $20,000 gold. Now, you guys are probably wondering what yield curve control is. It has a cousin that you've probably heard quite a bit about, but a different strategy with a similar end game, which is, of course, quantitative easing, which is when central bank buys basically everything that's not nailed down, like the kitchen sink, everything but the kitchen sink, to basically put an artificial floor below markets. Now, yield curve control is a little bit different, same end goal, but it's to basically say, hey, a long-term yielding bond, we want to keep that rate below a certain level. And what they do is they buy or sell bonds, the central bank, throughout time, anytime they need to readjust that to keep it in target with those longer term, right? There's been a few famous cases in history, of course, World War II in the United States. The United States needed to raise and borrow quite a bit of money to finance the war effort. But of course, if you're borrowing more, that threatens majorly increased interest rates, which makes the borrowing not even worth it. So they basically use yield curve controls by setting a certain level on 10-year plus bonds and making sure to buy. And interestingly, they didn't actually have to buy that many to keep the economy under control. I think a more famous one that people talk about all the time is 2016. The Bank of Japan switched over from quantitative easing to yield curve control. And what was so notable about that is that their goal is to keep any bond over 10 years at 0%. Right. So anytime that the market starts to price things higher than 0%, they buy. This has completely destroyed and flattened bonds in Japan to the point where at certain points, nothing's even happening with them. But that is a way, in theory, to keep the economy from spinning out of control. And interestingly, in the case of Japan, they've been purchasing bonds at a slower rate than they had to during quantitative easing. But that was a lot. I didn't intend to necessarily discuss all of that, but that's basically what would be happening here, is that we could see the United States effectively switching from quantitative easing or now quantitative tightening to a point of yield curve control to get this parity and to get the dollar in line. That would eventually lead to a lack of trust in the dollar and a strengthening of hard assets like gold and Bitcoin, and voila, $1 million Bitcoin. So like I said, don't read this and go, oh, Bitcoin's going to be $1 million. Read this and say, this is the situation, conditions. This is what could happen in the world that can make Bitcoin viable as a reserve currency or as a hard asset that everybody feels they need to own because it's a hedge against all of this absolute nonsense. My mind is blown right now, Scott. Yeah, every once in a while I bring out the old macro shit and talk about it. But that is what yield curve control is. It is quantitative easing. You can decide whether it's QE's ugly or super hot smoke show cousin. That's up to you. Bottom line is both are really bad in the long run because it is manipulation by central banks to control your money. Moving on, Bitcoin drops to 19.7, currently 19,878, as recession concerns weigh on financial markets. Euro nears dollar parity. Well, I don't know when this was written, but they got there. It was 0.99999 last time I checked. Got 99 problems, but the euro ain't one. Singapore's state-owned investor Temasek said it sees more broader market declines in the coming months. Listen, people are pricing in this recession for sure and saying that we would be in this recession basically through 2023. I'm not so sure that that will be the case, but my predictions are just as dumb as anyone else's. Let's be honest. But yeah, so listen, as we see all of global markets in turmoil, of course, inflation numbers coming tomorrow, people bracing, we're seeing Bitcoin drop to 20,000. But really, I mean, really, Bitcoin's just 20,000. That's it. We talk about it. It goes up to 22, goes down to the 18s, whatever. It's $19,800 and it's been there for a while. We were at 40 forever too, it felt like, right? That was a dream. Now, when you look back, we were sort of pissed that we were trading sideways at 39 and 40K. Remember that? It's like 40K all week, 40K all month. Nope, got worse. But listen, here's the weekly chart, right? We're sandwiched between this 200 MA and the 2017 highs, right? 19,666. That's what's happening. This is super sideways. Now, a lot of people obviously are saying that we're dead and doomed because, let me make sure I got the right tool. Whoa, it's showing a little magnet. I've never seen that before. Because we've got sort of now this ascending wedge, right? Which technically, if that is the pattern we're looking at, you expect it to drop down here. It's not a flag, though. I've seen people using that for targets that are way down here. That would not be. The targets would just be really near the lows or slightly below because it is not a parallel channel and it's not a pennant. That's neither here nor there, right? I mean, let's look at the 4-hour. It's almost like yesterday I was on here and last week telling you that we had bearish divergence with overbought RSI, which meant that almost inevitably we would see a drop to oversold. Exactly what happened, right? Exactly what happened. So now we're at overbought. So yeah, what do I look for? I don't know. It's really easy, man. Let's get rid of that for now. It's really easy. You know what I'm looking for. Bullish divergence with oversold RSI, and that'll probably send us back up to the 22,000s or something like that, and everybody will start talking about 100,000 targets, and we'll just continue to range. That's what we're looking at here. Overbought, down to oversold. Tale as old as time. Strong to say the least. I don't remember. So how do I not know that? Just a little scared, neither one prepared. Beauty and the Beast. Sweet. Yeah. Beauty and the Beast right there. Beauty and the Beast. Tale as old as time. Overbought to oversold and back again. And that's really all that we've got there going on with Bitcoin. We do not have a bullish divergence yet at all. Should we make anything of the, I saw this question and I can address it. So should we make anything out of the fact that we keep seeing posts about Celsius paying down debt? Yeah, I mean, from what I've read, and again, not an expert on the topic, but what I've read and heard from lawyers who have been talking about the Voyager situation is that if Celsius intends to file Chapter 11 or bankruptcy of any other sort, much like Voyager did, that you really don't want to have outstanding loans in DeFi, which would be extremely hard for the banks to reconcile. It's much, much better for Celsius as a company to be out of debt, at least to decentralized lenders and these platforms before they go into bankruptcy. I'm not saying they are going to or not. That's just one narrative. but you definitely would want those loans out of the way before declaring, because once you go into bankruptcy, you start talking about lawyers taking a piece and other people taking a piece, and it's very hard to reconcile because this is not a simple loan to a centralized authority. It's really testing the system. I mean, if you read when Voyager had their hearing last Friday about Chapter 11, it was like the judge was getting a lesson in DeFi and crypto, right? You have a judge who's sitting up there and he's used to Chapter 11 of these companies, and we start talking about loans and Three Arrows Capital having their money in DeFi and leverage longs and blah, 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 and Luna. Very confusing for probably your average person in the system. My guess then is that Celsius is just trying to resolve a lot of this before they take their next step, whatever that may be. Yeah. Scott, any idea where they've been digging a social? I don't know if it's additional sources of funds. I can't tell you this as fact either, and I hate to speculate. But no, I don't know that these are additional funds. Celsius clearly wasn't insolvent, I don't think. I think they still had a lot of assets. There's a lot of customer assets parked on the platform. So they've just probably been deciding how to allocate those and to use those moving forward, right? Yeah, Vol just disclosed $330 million in assets, $400 million in liabilities. I haven't dug that deep, but a $70 million gap is not that hard for them to close versus what we're seeing with these other platforms. So I would be pretty hopeful there, to be quite honest. What's up, Stonked Up? Good to see you. So I haven't dug in that deep. I obviously have money on Vault. As you know, they were a sponsor. So I'm waiting for more information, but I was happy to see that it was only a $70 million gap and not the hundreds of millions or billions that we're seeing, certainly with other platforms. Yeah, it's your assets that are being used to pay down their loans. Certainly. And as for, so listen, that's neither here nor there. Let's keep going, because the next story that I have here is about that anyway. Three Arrows founder says attempt to work with liquidators met with baiting. I dare say that the liquidators are master baiters. Masters at baiting, masturbating. But yeah, so listen, we've had Silent, Suzu, and Kyle Davies on the run reports that their Singapore offices were cleaned out when lawyers showed up. Nobody knows where they are. They're not showing up to meetings. They've got like blank Zoom screens with nobody talking. Well, Suzu did show up today and tweet. He said, sadly, our good faith to cooperate with the liquidators, which is going to be my new rap name group, anyone want to join, was met with baiting. Hope that they did exercise good faith with regard to the Starkware token warrants. That I didn't quite dig into or understand, so I'm not going to comment on the Starkware part. But basically, they're saying that that they are trying to pay back. They've sent a full list of all of their assets to liquidators, and that everything we are reading is FUD. He came out of hiding to tweet this today. Yeah. Oh man, I need to go find my liquidator. What's up, Jeff? Welcome to the party. Welcome to the party. Yeah, so I got to get the liquidator at some point and bring it in here. But yeah, liquidators mount up, right? And stop masturbating on Three Arrows Capital. Stop it. Speaking of shit that's weird, and we weren't, a Saudi Arabia-themed NFT collection is the latest free-to-mint hit. Have you guys seen this? The Saudis? To be quite honest, until Mike sent me this news today, I had seen the Saudi shit everywhere in my timeline, like pictures of like normal white dudes dressed as Saudi Arabians. I was like, this shit seems kind of racist, so I'm not even going to look into it and see what it is, because it feels, I'm not trying to go all woke on you. It just kind of feels racist. If that's your thing, have at it. But yeah, so come to find out, this is a major free-to-mint collection that's been, I would say, a bit controversial. It's 5,555 NFTs. His artwork is a derivative of the famed CryptoPunks collectibles. They were free to mint on July 9th and sold out within hours. There's been quite a bit of controversy about it. Some people thinking that it was front run by certain parties to get ahead of the mint. I don't know, man. What do you guys think of the Saudis? What do you think of it? Kristen seems to love this, if that's what we're talking about. A boy named Sue. That's funny. That's good. We should play that song. Yeah, Warren G's just trying to liquidate. Christopher Walker, I'm assuming that in this case, it's not POS, which is proof of stake, but POS, which is piece of shit. That Saudi appears to be smoking a marijuana cigarette. No, it's probably just a cigarette, but I mean, yeah, it looks like a joint. You can basically determine what you think. You guys don't really have many comments on the Saudis here. Not many comments. I don't know, man. I don't get it. So, oh, here, controversy. Oh, yeah, there was a bot that was doing things to the floor price and all this stuff. I mean, listen, if this is your thing, cool. But like, is there a reason that this was? Can somebody explain to me why this would be have long-term value? I don't know. Don't know. I don't know. Don't be racist, Chuck. Don't be a racist, Chuck. Nobody wants to be racist. I'm not saying. I mean, it just felt a little, slightly racist. How much ETH did you lose? I mean, I have a lot of Ethereum on Voyager. I'm not going to call it lost yet. Not going to call it lost yet because I've still got the sweet hopium. NFT game publisher Animoca raises $75 million and a higher valuation than before the crypto crash. Interesting. Animoca Brands, a major backer of the metaverse and NFT gaming, announced today that it had raised $75 million and a valuation of $5.9 billion. Smaller raise than last year because they don't need as much money. That's probably a good thing, but at a higher valuation. Right? These are the guys obviously behind Dapper Labs, NBA Top Shot, Axie Infinity, OpenSea. Like when it comes to NFTs and metaverse, Animoca is they're rocking the shit, to be quite honest. They're rocking the shit. I had Robbie, their CEO, on my podcast before. You guys should check that out. But what does this tell us? This tells us that investors are not scared of a bear market when it comes to the future of NFTs, metaverse, Web3, use whatever meme name you want for all of it. People are spraying cash still into the venture capital side of crypto. And speaking of which, GameStop's NFT marketplace goes live. 7 people care. The video game retailer released a digital asset wallet in May ahead of the service. That's cool. So the platform allows gamers, creators, collectors, and other community members to buy, sell, and trade NFTs. So this was supposed to, they intended to launch it before the end of July, and it's July 12th. So they managed to do that. So what do you guys think? So it seems like GameStop launching an NFT platform would have been super sweet for them, like, I don't know, 9 months ago. BitBoy losing his shit at OpenSea. I didn't see that, but I think that he is, I've heard, is developing a competitive platform, right? Thank you for being vulnerable with your followers. Huge fan of Scotty Too Hottie. If I'm being vulnerable, I don't know. Just being honest. I fuck up all the time, like all of you, and I'm not going to pretend that I don't fuck up all the time, because that would be disingenuous and it would make you guys maybe think that you shouldn't be fucking up all the time. Life is basically just fucking up all the time and stumbling through it and hoping that, you know, it's 2 stumbles forward to 1 stumble back, right? My intention here, honestly, guys, I've told you this before, but I'm learning alongside everyone else. I'm digging into this news like you. I'm trying to figure out what it all means. I'm doing my own research, trying to figure out which platforms are trustworthy. And I was clearly like dead ass wrong. I was dead ass wrong. And you can be pissed at me that maybe you followed me down that rabbit hole. And frankly, that sucks for me and it sucks for you. But like, I don't know, man, I'm taking it worse than most. I don't know how much money people have locked on Voyager, but they did release the list of unsecured creditors. And I know my balance, and I know that I'm on the. They only released the top 50, and my balance is on there, right? So it ain't good. It ain't good. Yeah, a huge believer in Mashinsky. Yeah, I've had him on here a lot of times. Met him in person. He was nice. He was nice. Right. And I'm not gonna like retrospectively act like I knew something bad was happening there or that I hated the dude, because frankly, the arguments that these platforms made, they resonated with retail and they made a lot of sense to me. In the case of Celsius, right? In the case of Celsius, Mashinsky said to me a long time ago, you know, we had him on a podcast. He said, look at JP Morgan. I did the research. I said, look at JP Morgan's, look at their balance sheet. It's like they're doing securities lending and they're making 20% a year doing that. You want to know how we offer our yields? We do the same safe security lending that they do, and we hand down 80% of those profits to you, and we keep 20%. Rather than giving you 0%, we give you 80%, voila, yield. That made sense to me. If he had said, we're parking your money on Anchor Protocol to earn 20% on a risky Ponzi scheme of a stable coin that shouldn't be called a stable coin, that would have raised more of a red flag, right? And when Voyager said to me, listen, I know these guys, right? And they said, even after Celsius, yeah, we're good. We're doing it different, which they were, by the way. Completely different model. Like Voyager not involved in DeFi, simply making loans to counterparties with extremely low risk. Well, it turns out that it was an unsecured, under collateralized loan to a lying ass party with extreme risk. Okay, different model. Different model. Yeah. Yeah. We just had no idea of the risk they were taking. And sadly, listen, I had my own like emotional attachment, cognitive dissonance, call it whatever you want. But like, I don't know, Caitlin Long and Mike Alfred, who you guys can say is fudding, whatever, sure. But like, I've had a lot of guests on the show who put out very clear warnings that this was only going to end one way, right? But it's really hard when you're in it and you're getting them sweet, sweet, sweet yields, I guess, to fully absorb the other side of that. Now, I see Mike is sending me something here. Let me see what this is. Oh, because apparently the Saudis weren't enough. We have the Jews. Saudis may be bidding Bitcoin, but who is bidding Saudis? Wow, apparently it's the Jews. The Zion doesn't need your shekels. This also seems pretty racist. Kind of racist. But hey, man, have at it. I guess buy the Jews like they did in Egyptian times. I should have said that. That was bad. Yeah. But yeah, what else we got here? Either way, that high yield risk structure is the flawed trade philosophy is why Bitcoin was created. Yeah, I mean, as I've said multiple times, we seemingly created all the shit we hated, but riskier and with less regulation. Oh, right. But listen, it's not like we still believe in unbanking people, servicing the underbanked, but maybe we need to do it with less centralized companies and just eliminate the yields. I told the story recently, but like when I started on Voyager in 2019, I had to be one of their first like 100 to 500 customers. Charlie Shrem and I met them through Charlie Shrem at World CryptoCon in Vegas in 2019. I was like, these are the nicest, coolest dudes ever. I love them, and this product is great. It didn't have yield. It was literally just a broker, right? Where they source liquidity from multiple exchanges. The yield came later, and that's where the risk was. They probably could have continued to build a business without the yield, and maybe we'll be able to do it successfully, right? I mean, like you look at FTX and Binance and Coinbase. These are companies mostly, not to some, but yield is not their main product if they do have it. So yeah. 187 viewers. Just curious, how does that compare to bull market 2021? Well, first of all, it's 187 on an undercover cop, according to Snoop. So that's cool. Feels like I have more than 187 viewers right now, but maybe I'm wrong. But it's bad. It's bad. It's not a lot. It's I say 395. I say 395. So you're just exaggerating to make me look bad. But listen, I've said this to you guys before. We do this. I do this not for numbers. I do this because I want to do this. And if there's 10 of you or 10,000 of you, will be amazing. But yeah, I mean, we used to have streams where we'd do 1,000, 2,000 people watching. And now it's a few hundred. And I'm still enjoying myself. And hopefully you're enjoying yourself as well. Right? Hopefully you're enjoying yourself as that. Jeff sees 10 people. But at least you're one of them, Jeff. At least you're one of them. Yeah, listen, 187. Every lyric in the Chronic album. But yeah, I mean, listen, it's not great, but it's not a surprise. Like I don't I see it on every social media platform. I see it with every channel. I mean, this is what it is, man. The tourists are gone. The tourists are gone, and it's not like your average person is walking down the street is like, you know what I need to do today? I need to find some new YouTube comment about that sweet Bitcoin that is being talked about so positively. Everybody hates us. Seemingly, we kind of hate ourselves, and nobody's interested. Nobody's interested. And I don't blame them because, frankly, like if I didn't have a YouTube channel or a newsletter that I'm writing every day, which I love, by the way, I would not be like checking charts and paying much attention. So, I mean, it is what it is, you know? Yeah, scary how few views are now. I feel scared. I feel scared. A lot of these DeFi platforms pull 187s on the space, unfortunately. Yeah, but guys, it's going to be the same cycle, right? We're going to do the thing. It's all dead. It's over. It's going to zero. And then Bitcoin will rise. And then everyone will forget that. And then you'll see all this new shit that's being built. I just told you, like Animoca, $6 billion valuation, building a bunch of shit. Not them specifically, but VC is still coming in to build similar things to what has just exploded. And they're not going to stop, right? If you believe that like humans are going to learn their lesson, I mean, really? Like we literally just did like the Lehman Brothers 2008 shit that we hated so much in our own space only 14 years later. Crypto was built to avoid those problems, and we did the exact same shit, kind of worse in its very small microcosm. We built that. That's really not the intention. And we'll do it again. And we'll do it again. And we'll do it again. And we'll do it. Animotion. Animaniacs. Zany to the max. Just remember, prices go up because more people come in to buy. Now's the time to buy and accumulate. You sell when the laser eyes and moon emojis come out. Oh, man. I feel you. I feel you. Anyone who hates it right now will love it, love it, love it at a higher price. Guys, that's all I have got for you today. I will be back tomorrow, but we'll be off on Thursday and Friday. So don't miss it tomorrow. You can be one of those 187 people. Thank you guys for tuning in. I will see you tomorrow. Peace.
That's dope.